The US, for most people, is already in recession. That I tell you. Most families struggle. Our debt level as a percent of the economy has gone into explosive growth mode. The problem becomes affordability for the majority of people. The majority of people have salaries that go up, but they do not go up at the same rate as the cost of living increases. We have a housing crisis in the US housing market because affordability issues. Most people can't afford to buy a house anymore. And that's why I'm so critical about the Federal Reserve's monetary policy, because what they've created is an affordability crisis. They can print the money, but it hurts ordinary people more than it helps them. The whole economy, the whole system is geared towards prices going up and driven by asset inflation. If they don't go up anymore, you have a recession. And that the Fed is essentially afraid of. So they will pursue policies that are inflationary rather than policies that are sound. So you have a group of 1% that benefit and 80% do not benefit. They live paycheck to paycheck. The Fed causes more problems than if you have no Fed. The best would be to essentially dissolve the Fed. Well, actually, it occurred relatively soon after I joined the White World. I joined in 1970, and by the summer of 71, there was pressure on the dollar because several central banks in Europe wanted to have hard assets instead of dollar holdings, notably the French President Charles de Gaulle. And then on August, I think it was 18th or 21st, 1971, Nixon devalued the dollar and went off the gold standard. In other words, with the stroke of a pen, he declared that the US would no longer back the gold at $35 an ounce. In other words, from then on, the price of gold would fluctuate. And thereafter, the dollar was weak throughout the 70s, and it fell in value, like against the German mark, by approximately 70%. So the fact that the government official, the president of the US, can essentially negate a promise that was made earlier on kind of gave me the impression that you can't trust government officials. I'm not saying this was the only reason why inflation accelerated in the 70s, but it was for sure a contributing factor. And it also led to the gold bull market of the 70s, where gold rose from $35 an ounce in 1970 to over $850 an ounce in the year 1980. From 1970 to 1980, in 10 years, gold rose from $35 an ounce to $850 an ounce. I think the character of the US has changed a lot. I mean, if you look at the 19th century, the US started the 19th century with a population of approximately 5 million. And it ended the 19th century with a population of 80 million. So there was a lot of migration into the US. And these people, they went to the US because living conditions in the US were more favorable than in Europe. I mean, there are many reasons why they went to America in the 19th century, but one of them was that, and this I have to say, the socialist economists, they misrepresent these factors because they always say the 1870s in America until 1910 were the robber baron days, and they push down the capitalists like the Rockefellers and so forth, because they say they abused people. Yes, throughout history, people in power have abused people with less power. And if I may summarize, uh, the history of mankind is the powerful people have always used labor. You understand? Labor is badly paid throughout the ages. But in America, the conditions for work were much better than anywhere else in the world. And that's why they went to America, not because America had Social Security. Social Security was introduced in 1934. In the 18th century, you arrived in America and you had to work or die. Nobody would help you unless you had family and so forth that were already established. But in general, people came to the US because labor conditions were better. They were not good, but they were better than in Europe, that I assure you. And it was a country where people could move ahead in relative freedom that wasn't given in Europe. But anyway, the meaning of going off the gold standard is the gold standard. I mean, no, the Bretton Woods Agreement, which was in place until 1971, was some kind of a gold standard. It wasn't the perfect gold standard, but it was some kind of a gold standard. And as such, it was more difficult to print money than after going off the gold standard. And the 1970s was the first uh, period in American economic history, post Second World War, where we had high inflation. In fact, we had the highest inflation ever in the US, save the Civil War period, because in the Civil War there were shortages of commodities. But other than that period, the 1970s was a period of accelerating inflation, and that was enabled essentially by going off the gold standard in 71. It wasn't the only reason, but one of the important reasons. I want to clarify one point. I studied under a professor who was world famous because he argued for flexible exchange rates. I am all in favor of flexible exchange rates. In other words, I'm, as an example, in Hong Kong, we have the Hong Kong dollar peg. The Hong Kong dollar is pegged to the US dollar. In my view, this peg is wrong. I would prefer to have the ability to implement independent monetary policies in Hong Kong and not peg your currency to the US dollar. Because once you peg your currency to another currency, you inherit the monetary policy of the other country. And Hong Kong and the US are totally different economies, so their needs may be different. I'm in favor of flexible exchange rates, but I think that with 1971, some monetary discipline went overboard. They abandoned it. And thereafter, if you look at, say, the debt in the United States, 1900 to today, the debt grew at about the rate of GDP for hundreds of years, in theory. But after 71, debt began, especially after 1980, government debt began to grow at a much faster pace than, say, GDP. So our debt level as a percent of the economy has gone into explosive growth mode. And now we are burdened with very high debts. Now, some people say and tell me, well, you've been arguing against debt for a long time and the system still functions. Yes, that is true. The debt level has expanded a lot and it still functions. But that is also the case in Turkey and was the case in Zimbabwe and was the case in Argentina. But the problem, and you know it as a real estate broker, the problem becomes affordability for the majority of people. The majority of people have salaries that go up, but they do not go up at the same rate as the cost of living increases. And so, as you pointed out, we have a housing crisis in the US housing market because affordability issues. Most people can't afford to buy a house anymore. The rich, yes, the 1%, the 0.1%, they can afford to buy a house. But young people, they all struggle to buy a house. And that's why, although home prices are at the record, in other words, normally in a bull market, the volume goes up with the price increases. But in this housing boom we have now, transaction values, in other words, existing home sales and new home sales, are all down. And that's why I am so critical about the Federal Reserve's monetary policy, because what they've created is an affordability crisis. They can print the money, but it hurts ordinary people more than it helps them.